Can I just ask if we've had any apologies? I've not had any personally. Has anybody else had any?
Not directly, other than through the tracking on here.
Okay. All right. Okay. In that case, can we move to item 2, to declarations of interest? Members are required to declare any personal, prejudicial or disclosable pecuniary interest they may have relating to items on the agenda and state the nature of such interest. So can I ask if there are any declarations of interest now? Okay, no declarations of interest in that case. We'll move on to minutes of the previous committee meeting. If I can just run through the pages, and if anybody will interrupt if they want to make a change or an amendment. Any changes to page 1, 2, 3, 4, 5, and 6.
Can I formally move those for you, Chairman, as a correct record?
Okay, thank you. Second that, somebody, please.
Yeah, I'll second that.
Right, thank you. Thanks very much. In that case, can I just touch on the action points contained in those minutes? Under 4.4, we were discussing last time that we may have a presentation from the TAME team, but unfortunately, as you can see, this agenda is too full for that, with 358 pages as it is. However, I can direct members to a section in the operating report, and if you, I think that's on page 25 of the pages of the papers. There is a summary there of what the TAME team have been doing. Okay, on to the next item, which was annual governance review. Now we've got a section on the agenda, item 10, to cover that, so we'll get there further down the meeting. And finally, we were going to set the dates for the next meetings, which we will do at the end of this one. Okay, they were the action points, so thank you. If we can move on now to the monthly operating report, and I think, Ian, you were just going to take us through that.
Yeah, thanks, Chris. I won't take people through it because it's A, because it's quite a detailed report, and B, because of the paper deadlines. It's actually now slightly out of date. There is a January monthly operating report that has now been posted up on the website, but that was produced after the deadline date for this meeting. I think the one thing that probably is worth drawing people's attention to, because some members of this committee may not be fully aware of what has happened, but we did receive on the 4th of January a letter from the department that made some significant funding cuts for next year for TFN. So these principally fell in 2 areas. One was to reduce the core funding that we get for essentially our statutory functions, down from 10 million to 6 million, and there was also an in-year cut for this financial year, down from 10 million to 7 million. So essentially, over the course of this year and next year, they took 7 million. There was also an announcement that the department would, subject to them covering the winding down costs of the IST programme, they would no longer be funding IST. So we had, people may remember, we had got £33.4 million in the CSR-esque for mainly for pay-as-you-go type installations across the north in the IST programme, and that funding has been withdrawn. It's probably worth adding as well the NPR funding, total funding envelope, which covers TFN, but also work that Network Rail and ISB2 do directly for the department, has been maintained at 75 million. In response to that, those funding cuts, we have done quite a significant amount of work, and there is a paper that I'm presenting to the board a little later on today, which just sets out how we are addressing that. There has been some positive news in that the department has agreed that about £2.5 million of what we currently pay for through our core resources can be picked up through NPR programme funding, which is where those costs are actually being generated. So that has eased the pressure from the original view. But I think, you know, even with some reserve releases, the longer term funding position for TFN is clearly significantly reduced from the 10 million run rate that we had previously. Probably worth me stopping there and see if anybody's got any questions or comments on either that or the rest of the report.
Anybody?
No, just my apologies for being late. Microsoft Teams needed to be updated. Anyway, good morning, everybody.
I've put my hand up.
Yep, Alan.
Okay.
Councillor Brett here.
Chair, Councillor Halland, Brett wants to speak.
Yeah. Okay, I'm not sure this is the place, etc., but commenting on the cuts, etc., I don't know whether it was the LGIU or Blackstock Consultancy that this morning commented on transport for the North, and it wasn't done in a very positive light and the government attitude. So there is a PR thing there. But, and I don't know where else I can raise the issue with operating. I keep away from trains as far as possible because it's full of people who know much more than I do. And there's an organisation in Rochdale called Storm who have been raising quite a storm with me over the Calder Valley line and what's happening with regard to the new timetable arrangements. Now, I know there's a consultancy on this, but nobody's believing what they're being told. This is especially significant. The service from Rochdale is superb into Manchester. The trouble is, it's the stations along the line in Rochdale, that's Smithy Bridge and Castleton, especially Castleton. I just want to flag it up because I promised my backbenchers I'll flag up every time I can at any public meeting I am at, because quite honestly, I've told them that this is temporary, but nobody seems to believe the operator or the government. I'll leave you with that. And if I'm in the wrong item, I apologise.
I'm not sure on that last point, but I can pick that up with David Hogarth, who's the director of our strategic rail team. I think he'd probably be the best person to get back to you in terms of a specific response on that, Alan. So I'll pick that up with David.
Well, you do, and if he could send me an email, then I can copy in at least the backbenchers that know I've raised it. What about the first issue? And I don't know whether it was LGIU or Blackstock Consultancy commenting on us this morning. I'm 90% certain with this morning, otherwise I wouldn't remember.
I've not seen that, I have to say. What was the comment?
I keep muting myself, so I have to unmute. Without going back specifically, but I think basically what they were saying was, is there still a future for transport for the North with all these, I may have misread it, but of course these are Blackstock especially. Now it could have been LGIU, both of which I read first thing this morning, because it's better than reading papers or going on online, because they keep you in touch.
Okay, I think the problem is that members haven't seen this this item, so we probably can't really comment on it here. We need to go away and have a look at that. So thanks for raising it. It's just that I guess most people weren't aware of it. I have got a question from Kevin. You want to come in there, Kevin?
Thanks, Chris. I recognise that there's a paper going to board today, I think you said, Ian, so I don't want to cut across that. But I was just querying whether the complete removal of the IST funding has, whether there were interdependencies across other parts of the programme, and particularly, what risks that might pose in terms of that interdependency and/or connectivities, cross connectivities. But if you can't answer because of it's going to the board, then I fully understand that. I'll pick it up under the risk register later on.
I can be reasonably brief. I think. I mean, I guess it's twofold. One is that the programme itself is largely standalone, but there are clearly reasons for wanting to keep IST capability and capacity within the organisation. So one of the things that is included in the board report is that we are looking at how we retain some of that capacity, just to address some of the things that you're talking about, Kevin. So it is something that is being considered. We've not gone nap on it just yet, but that is something that we'll have to do in the next few days.
Okay, thank you.
Okay, any other questions on the operating report? No. Okay, thanks. Thank you, Ian. Thanks for that. Thanks for your questions. Can we move on to item 5 then, the internal audit update, please? Who's doing that? Are you doing
Hello.
that?
Hi, it's Lisa from Internal Audit RSM.
Hello, Lisa.
Everybody again. Good to see you. Yeah, so in terms of our progress paper, hopefully take it as read, but what I'm pleased to say is the remaining work for 2021 has been completed with the 3 assignment reports we're presenting today. Good progress has been made in terms of initial discussions in terms of drafting the 21-22 internal audit plan, which I'll come to. So the progress paper is very much about giving you a position statement of where we are, which clearly, as I said, is completion of last year's plan in full. And I think during the pandemic, a great thank you to the management team and, everybody being involved in terms of the delivery there, because clearly we've been distant auditing as well as management distant working. So the progress paper there really is just that conclusion for you, providing a summary of year-to-date work from the previous year, as well as some sectoral briefings that we've issued to the organisation during the last period since the last committee in November. So unless you've got any particular questions on the progress paper, very happy to move on to the assignment reports.
Any questions on the progress report? No, no, I think most people are happy with that. Thank you.
Thanks. Thank you very much, Chris. So the first assignment report is the investment programme assurance review, page 61 of your pack. Clearly, this was looking at the arrangements that are in place, and you'll see a positive report in this regard, with some context, obviously, in terms of the sequencing of the framework and a lot of background in terms of the process and the governance arrangements that are operated. Clearly, TFN has sound systems of control on the work that we've undertaken, and clearly at this moment in time, we're during the audit building up an assurance framework approach in terms of the future reporting and assurances over delivery of the investment programme. We just made the one action, a medium action, and that was very much about just triangulating information that's available and mapping actions that come through between the Northern Transport Charter, the investment programme and the business plan KPIs, so that you have a very clear and transparent reporting line there. So disparate parts are pulled together in terms of the approach for that. Clearly that's been agreed with, and you would have seen management's action has said that that will be implemented as part of the business planning cycle for 21-22. I'll stop at that point.
Excellent, fine. So I guess you'll just be checking up on that further down the road.
We'll do a follow-up of that action and see how that's been embedded during 21-22's audit plan. Great.
Okay, any other questions? No, that's fine. Thank you.
Thank you very much. The next report, clearly, take as read, but again, just to draw out the new payment commissioning process. Very positive to think that you've transitioned to an automated system whilst during, a period of lockdown, and the controls are well designed. We did compliance testing, and you'll see we use data analytics, which enabled us to do a broader sampling test, and as a result of which we found no anomalies that were of concern or further investigation. This report was very positive in such that there was no management actions. So I think all credit to the team in terms of implementing this move and actually embedding it during the previous 6-7 months of its implementation.
That all sounds very positive. Thank Thank you for that.
Well-
Yeah. Any questions on that section?
No,
No, I
that's
think
good.
we can take that the committee's happy with that. Thank you.
Thank you very much again. And the last report, page 83, income and debtor management, clearly an important area in terms of, maintaining cash and cash flow, and obviously a report I would imagine again, Mazars as external audit may have some interest in. We only identified one developmental area in this outcome of this work, and that was very much about updating the grant acceptance and management policy. So again, you've got a cyclical review of that. At the time of the audit, it just needed updating. There were no practices, that we noted that were in breach of the existing policy, but I think good governance just to keep it updated. You'll see a low action, and that's due for implementation at the end of June in accordance with your review cycle. So other than that, positive report.
Excellent. So as far as we're concerned, that's a pretty clean bill of health, which is very reassuring to the committee. So thank you for that. And I appreciate the work that you've been doing and the team, and also that it must have been quite difficult doing this remotely as well.
Like I say, it's worked really well, and I'm sure Ian and the team would say it's about the planning. If you get the planning right, and Mazars will say the same, anything's possible. So no, it's a thank to the team because they've made it seamless for us. And then obviously what we will do, just to conclude, we've drafted our year-end report, which obviously will come to you at the next committee because that's prepared. Obviously we wait till the end of the year, so that's fine. And then our next paper on page 93 is looking forward. And this clearly is a proposal for next year's audit plan starting April, and very much in regards to discussions that we've had with Ian and representatives, obviously, in terms of TFN coverage. You'll see on page 97 is where we highlight the areas for coverage for next year. I mean, clearly they're quite detailed in terms of scopes, and obviously I'll take it as read, but you'll see there's a range of reviews looking at governance and risk management strategy, purchase to pay framework, and again ensuring that's appropriately complied with in terms of authorisation and control over suppliers and renewals of suppliers, etc., and payments made. Flexi time, so again, recognising the world we live in and the policies that are in place. And that was an audit that we brought forward from last year, if you remember, and an IT audit cybersecurity. And again, it goes without saying, every audit plan that we undertake, we're undertaking a form of IT cybersecurity. And as you'll see, you've got an option here, or it could be GDPR governance, both of which high profile, one from a hacking and phishing point of view, two, GDPR from a compliance point of view and safeguarding, obviously, information flows. And then as ever, we'll have the follow up where we follow up previous year's management actions. So that's the plan. Obviously, there's a lot more to it in terms of the strategy underpinning it, but clearly happy to take any comments or any suggestions in terms of coverage where you feel as a committee you require assurance.
Okay, so that's item 6 we're on now, and we're looking at the internal audit plan, which the committee needs to agree. So there's a comprehensive paper there, which internal audit have prepared. So I don't know if anybody's got any comments or questions on that. We could open this up. One from Kevin.
Thanks, Chair. I had a few sort of observations, I suppose, stroke questions. In terms of the governance effectiveness framework review, I wasn't clear whether the reference to looking at governance arrangements during and post COVID-19 was the key sort of context for the review, or whether it was really just reflecting the timeline. So that, I think that would be helpful if you could clarify that. Is the purpose to look at the governance arrangements in the context of COVID and how the organisations operated in that environment, or is that immaterial? So I suppose that was just clarification on that. In terms of the risk management strategy review, I was a little bit unclear about how you were proposing to benchmark that, given the pretty much uniqueness of TFN as an organisation. So I was a bit sort of bemused as to how you were proposing to do that, not wanting to sort of overstep the mark in terms of telling you how to do your job. But and then I suppose the final one was on the follow up with the cyber security, which felt a little bit odd to me in terms of the either or scenario that you were presenting there, in that if you felt that the follow up if the actions hadn't been followed up, then there was an alternative suggestion to do another review, which just felt a little bit odd to me. Surely, if you've made recommendations to management and they've accepted those recommendations, then they should be actioned, rather than then having to go back and redo a review. So that just felt a little bit odd to me.
Okay, would you like to take them in order? Yeah. So the first point in terms of the governance effectiveness, you're absolutely right, Kevin. What we're trying to do is provide assurance there that good governance has prevailed in accordance with your own reporting, institutional arrangements or constitutional arrangements, i.e. during the COVID period, which we're still in, obviously, in terms of remote working. And then hopefully what we are praying for is some normality later in the year when you transition back to, governance arrangements in the future. So it's making sure that everything that you said you'd be doing in terms of good governance has been completed during a period of change. And that changes from going from, on-site presence to digitalisation through to reporting. So it is going to cover the two. The second point, you're absolutely right. In terms of risk management strategy, what we will do, we'll compare it at like what I call a strategic level to say, your risk management approach and strategy, is it keeping pace with what we're seeing in the risk management world? Does it need to evolve? Is it still delivering what it needs to deliver for you as an organisation? Absolutely right. Your individual risks will be completely unique in a lot of cases. Obviously, you'll have corporate risks around staff and well-being and people, which we can benchmark across. But specific ones, in terms of your deliverables and programs, absolutely completely different. But the whole idea is to look at your framework to say, is it following the good practice that we see elsewhere? And then the third point, yeah, I totally understand where you're coming from there, because what we would normally do is undertake a normal follow-up of the cyber actions within our follow-up allocation. But because of the timing of preparing the plan, the delivery of the cyber work, we felt would be prudent and wait to see how those actions were being embedded and if there were any other issues that came through. Ian, I don't know if you would like to add any more to that kind of either or scenario, but that's currently where we are. And obviously the plan will remain agile and we'll bring it back to you.
There's probably a couple of things, Lisa. One is, I think cybersecurity is the only area where we've had anything less than the highest level of assurance, Kevin. And I think the kind of test was, are RSM happy based on their management actions that we've taken, that the concerns they've raised previously have been addressed, and therefore if they're not, then we would proceed down that route. Otherwise, we would take the opportunity to use what are limited resources to actually take a look at something that we think probably does merit an audit exercise, which is around GDPR. I think it's probably also worth saying that the governance framework scope probably does need to be considered at more length before we actually embark on it in the first quarter of next year.
Can I just bring in Liam before we come back to Kevin?
Okay, thanks, Chris. And my questions won't be anywhere near as detailed as Kevin's, but mine's more of a kind of in the round question, because I note in the report, which is very good, by the way, that it makes reference to the level of resource required for next year being similar to that required for last year. But in light of the very significant funding cut the organisation is experiencing, let's be blunt about it, we're going to lose up to half of our core budget. Does this plan not need revising, and thus the kind of fee that we're being charged need revising as well?
I mean, from our perspective, clearly we're always agile in terms of your assurance need in a particular period, because sometimes a plan can go up. You're absolutely right in terms of your needs, and it can go down, not just for financial constraints, but actually you've got other assurance mechanisms in place. That's what I would normally say. I mean, Ian, can I pass that to you as finance, please?
Sorry, it's probably one for me. I mean, the total cost at the moment is about 25 grand, give or take. If you look at whilst the budget, if we have had funding cuts, the bulk of the activity that internal audit is undertaking is around core financial systems, core processes, and risk. And for as long as the MPR programme is there, the load on those processes will be at a level. So you're right, you're absolutely right, Lee, and the core funding has been cut quite heavily, but as a proportion of the overall funding that we're likely to be dispersing this coming year, it's a relatively small part of that. And of course, the internal audit is covering MPR activity as well as others. So what there probably is more scope for, and we do this already, is to recharge some more of the internal audit costs into the MPR programme.
Okay, thanks, Ian. Kevin, did you want to make some final statements on this?
No, not really. They're really helpful responses from Lisa and Andy, and so I'm pretty satisfied with that. Maybe just one comment that second paragraph on page 98 of the plan, you know, in terms of that audit of cyber security or GDPR could be recast, just to clarify, you know, that how you explain that, Lisa.
Okay, no problem. Do that. Yep. No problem.
Okay, if we could make that an action point then.
Thank you.
For Lisa. Any other comments before we leave internal audit? No, well, thanks very much indeed. Thanks.
Thank you.
Thanks for the summary, much appreciated. Okay, let's move now to external audit, item 7, please.
Thank you, Chair. I'll take the first couple of papers that we've got, and then I'll hand over to Campbell just to give you all the rest from my talking, and let him pick up the progress report. So the first of the 3 papers we've got for you is our annual audit letter, and I will scan through this one fairly briefly because there's not really very much in here that's new. This is the report that formally concludes the audit for the 31st of March 2020 financial year, and it's come to you today because it's really an important part of the overall accountability agenda, if you like. It goes onto your website so that members of the public can see what Transport for the North's auditor thought of Transport for the North and the work that we did for you. It sets out the 4 areas, and page 117 of the papers summarise that, and you will be familiar with it from our previous discussions. You will see that it refers to the fact that we signed off the accounts on November the 18th. We also issued a VFM conclusion. We completed our group audit reporting in accordance with National Audit Office requirements by the end of November, and it confirms for you that we didn't use our statutory powers to issue public interest reports or any other matters like that. The report then goes on to talk through really the substance of what was in your audit completion report that I brought to you in November, and we discussed at some length. So I wasn't going to go through each of those pages in turn, but I do want to draw your attention to some new information that's in there, if you like, which is on page 127 of your pack, where we refer to fees, and you will see that we've agreed with Ian and the team that we will bill you for an additional amount of £4,200, which is because of the complexities and the challenges, if you like, around the accounting for your IST costs last year following the change to the nature of the scheme. You'll be aware that there were significant amendments to the accounts as a result of the way in which we needed you to account for that. And I think I told you at the time that it was quite a highly technical and complex matter. Just to be clear, those fees need to be approved by PSAA, and although we have asked for that approval, we've not yet received it. That's just a timing issue, and I'm sure that will come through in due course. Page 128 of the annual audit letter is really a forward look, if you like, around the challenges that you face, and I think you've touched briefly on the implications of your reduced funding arrangements for the current and future year, and in particular the impact on your core funding. And then you'll see on page 129 some information about the change to the VFM conclusion looking forwards, and members will be aware that in the past we've given a very binary conclusion, so either Transport for the North has appropriate arrangements in place or you don't. But looking forwards, under the new Code of Audit Practice that's applicable from 2021 onwards, that will change to be a narrative report that talks more about the arrangements that you have in place and whether or not those arrangements are adequate. So hopefully provides you with more information to take the organisation forward with. So I'll stop there and see if there are any questions on the annual audit letter, and then I'll move on to talk about the audit strategy memorandum, or the audit plan as it's also known.
Well, okay. Any questions then? No, I don't think we've got any questions on that. Everybody seems to be happy. Okay. That's good. Thank you.
Thanks, Chair. I'll continue on then with the audit strategy memorandum. So this officially opens our work for the 2021 financial year, which from your perspective comes to an end in about 6 weeks now. It sets out the work that we need to do to deliver you a code compliance audit, which is what's required of us. And it therefore comments on the work we'll need to do in respect of your accounts and also value for money. Page 142 of the audit strategy memorandum sets out the timeline for our work this year. And you will see from that our planning is underway, and we are kind of in the first of the quadrants, if you like, there in terms of internal, in terms of our discussions with you, our identification of risks and so on. And we will be working on site, although that's not quite the terminology, is it, working remotely with you to do our work on your systems and our early testing through March and into early April. We've planned at the moment to complete our final accounts work, so that's the post-statements work in the June-July period. But I think it's just worth me mentioning the sort of overall context really for 21 audits, which is that MHCLG are currently consulting on a revised timeline for the audit. That would require you to have accounts ready by the 31st of July and for an audit by the end of September. Your team are very confident that they can still work to what was, if you like, the old pre-COVID timetable, and we're happy to engage with them on that basis and plan to carry out our work in that way. You'll see on page 143 the management experts and service organisations that we'll all relatively use in terms of your work, and then the audit strategy memorandum goes on to talk about the significant and the other risks that we have identified in the work we plan to do. I think it's probably worth me just taking a minute to say that we have rebutted the risk of revenue recognition, which is one of those standard risks that auditing standards say apply in every organisation. We don't think it does apply to you, and that's largely because your funding is, of course, grant funded, and it's relatively easy from our perspective to get assurance around that. And it's interesting to pick up the fact that Internal Audit have done some work on that, and we will, of course, look at their findings when we complete our work. But helpfully, nothing that Lisa has said would lead me to believe that it's not appropriate, excuse me, for us still to rebut that risk. We then go on at page 146 to talk about the 3 risks that we've identified for this year. There are 2 that are classed as significant and 1 that is an enhanced risk. I'm going to run through some terminology and wording now that I use in all of these meetings with you, and you're probably fed up of hearing me say. So the first one is in respect to the management override of controls, and that's a presumed risk in all organisations. It's not specific to Transport for the North, and there is nothing that you as the governance committee need to be concerned about. This is simply the fact that we are required to direct our audit effort towards those areas of the accounts where management's actions and decisions can directly influence the financial outturn of the organisation. So we look at the way that the judgments that they've made in putting the accounts together, the estimates that they've calculated, the way in which they've used journals and so on and so forth. There's nothing new there, and as I say, nothing particularly to be concerned about from an individual perspective. The second risk is then in respect of the pension liability valuation, and I think I told you last year and I'll tell you again next year, I'm sure, that that's a huge number. It's an estimate, and we therefore do need to do a considerable amount of work on it. The third area that we've identified as a risk may or may not materialise in the year. So it's in the audit plan now for completeness, but I may at some stage report back to you that the risk has gone away. And it relates to phase 2 of the IST scheme and the fact that some of those assets that you currently hold may well novate to other organisations during the current financial year. If they novate before the 31st of March 2021, we will need to look in some detail at the accounting treatment for that because it's a relatively unusual transaction and it will be fairly complex. If they don't novate before the end of the year, I'll come back and tell you that. I'll tell you that we haven't done the work, but I'll also tell you that we will be doing it next year, because all it means is that that actual transaction, that novation, has slipped beyond the end of the financial year. The report then goes on to talk about value for money, and you will be aware that there are 3 criteria that we look at. They're slightly different this year than they have been previously. So we need to consider your financial sustainability, your governance and decision-making arrangements, and then finally what you are doing as an organisation to improve economy, efficiency and effectiveness in the way that you carry out your functions. You will see that we've identified a single risk that we will follow up as part of our work, and that's about how you are responding to those reductions in core funding. So we know that you're proposing to change some of the allocation of cost to programmes. We know that you're planning to look at how you can use reserves and general fund balances to support your core functions going forwards, and we will report back to you on the arrangements you have in place for that. I was going to stop there, save to say that there is some information on page 158 around the materiality that we will apply in conducting the financial statements audit, and just to mention that that is set at £1 million, but obviously we'll revise that once we receive your draft accounts. We've based that on last year, and it's fixed as a proportion of your spend, but as I say, we'll come back and look at that once we actually get the accounts, because it's likely that that may reduce a little. I'll stop there again and take any questions if I may before I hand over to Campbell.
Any questions? Okay, just a couple from me then. On the materiality, obviously it's expressed as a percentage here. So is that some sort? How do you arrive at the percentage?
So we use expenditure as the measure, and that's because that's the thing that we think taxpayers are interested in the context of public sector organisations. And then our methodology sets a range that figure can be anywhere between 1% and 2%, depending on a host of risk factors, if you like. So we're comfortable with the fact that you sit in that range and towards the top end of it. That works for us, and we will, of course, update you if we think that there are any factors that would change our assessment of your materiality at this stage. Not everybody is at the high end of that range. It genuinely is a range, and across our portfolio, mine in particular, you can see that there are some organisations where we consider the risk to be higher, and therefore we work to a lower level of materiality.
Okay, thanks. Just something to point out to everybody, really, which I found quite helpful, and that's on page 137 of the papers. There's an engagement and responsibilities summary, which I think is very helpful in summarising all aspects of the work, because obviously there's a lot going on, and it's sometimes quite difficult to just understand the scope of everything. But I thought that brought it together very nicely, so much appreciated that. Thank you. Any other points to our external auditors on the first 2 items, annual audit letter and audit strategy memorandum? No, thank you. Well, thanks very much indeed, Karen. So can we move to item C, the audit progress report? And I think, Campbell, are you helping us with that?
Thank you, Chair. First time I've spoken at the committee, so it's a pleasure to meet you all formally, I guess. This is just our regular progress report. If I can take it to page 170, and really 1920 Karen's already set out as part of the annual audit letter, which concluded the 1920 audit, so I won't say any more about that. In terms of 2021, Karen's already said, we've carried out our initial planning, and you've seen the audit plan that she's just presented, setting out the key risks for the 2021 audit. The other thing, just to bring to your attention, is you'll be aware that there was a change in the Code of Audit Practice, CNAO, changing the value for money arrangements. There's a bit more information on that on page 171 of the pack. I mean, the key headlines are that we don't give a formal conclusion, so you won't see a qualified or unqualified opinion. We'll just give a commentary in the annual report, which takes over from the annual audit letter that Karen's just presented here today. And also, we're obliged to report any significant weaknesses we identify promptly throughout the year to yourselves. So those are the sort of key change in terms of reporting. You'll see there's also been a change in the 3 criteria which we use, and at the moment we're still going through the guidance, and we'll be discussing the change in approach with officers as the year goes on. So they're really the sort of, I'll use the word headlines in order for want of a better word. The rest of the report is about some national publications and articles of interest which you might find useful to read. I'm not going to go through all of those. I will highlight in particular items 9 and 10, which is the Redmond report, which you'll be fully aware of, which obviously covers the significant pressure on the audit sector in general and the pressure on fees. And item 11 as well, which covers the local inspections that are undertaken, which Mazars takes very seriously. It covers Mazars and the other public sector firms as well. And that highlights a number of improvements which Mazars has already looked at and taken measures to improve our methodology last year. So not even 2021, we brought those in last year. So I suppose key pressures there would be valuations of property, pensions, estimates, judgments. That's all I really wanted to go through, Chair. I'm happy to take any questions on the progress report.
Okay, thanks. Any questions there then? No questions. I have to say, very helpful. Thank you for summarising all the national publications, putting all of those in one place. Very useful reference material. Thank you. Also interesting that you highlighted the Redmond report, which obviously covers the areas of Audit and Governance Committees. So it's something we need to keep our eye on, making sure that we keeping up to date with the latest thinking there. So that's something which is helpful. So thank you. Thanks for highlighting that too. Okay. Any other final questions to our external audit team? No. Well, thanks very much. Thanks very much indeed.
A very brief one, sorry, Chair. I did put my.
Oh yeah, sorry. Got Councillor Brewis, please. Thank you.
I think what I'd say probably the absence of questions is because I found this report to be a fairly comprehensible one in a very incomprehensible time, and I'd like to say how useful I found it and thank them very much indeed, Chairman, if I may, for something which was comprehensible and understandable. Thank you.
Well, thanks for that, Councillor Bruce. Yes, I'm sure that reflects most people's thoughts on the committee, so I appreciate that. Right, okay then, let's move on to item 8 and Treasury Management Strategy. Are you taking us through that, Paul?
Yes, I will, Chair. Yeah, I just hope we can continue the theme identified by Councillor Bruce into the next 2 items as well. Fingers crossed. Chair, I felt it would be useful. I mean, the documents are quite extensive and quite long, and I thought it would be useful just to tease out some key points and put them on a presentation which I've got, which will hopefully keep us all on the same page. So if I could just flick across to that.
Great, thank you.
If you could just tell me if you got my screen.
Not yet.
No.
No, not yet.
Okay, let's try again. Best laid plans.
Yeah. No, we're not getting it yet.
Right.
We've got Ian, I think, at the moment. Yeah.
One more go. There we go. I think we should be okay now.
Yep, that's it. Yeah.
Okay.
Good. Thank you.
Thank you for your patience, everybody. Right. So I just thought it'd be useful just to, I mean, as you said, the documents for new members, the next 2 items are both the Treasury Management Strategy and the accounting policies, which are really key documents in relation to the financial considerations of the organisation. They, in terms of their background, we review them every year, I think, and they are very long documents. Arguably, certainly the Treasury Management Strategy and its policy and procedures are, but it's very important to us as we go on to identify in terms of the framework. And then we would, in terms of the Treasury Management, we would report on that at least 2 or 3 times during the year in terms of progress reports and how we comply against that strategy. But generally, you wouldn't expect there to be too much change. I think in terms of there's a refresh of the strategy, but the accounting policies themselves wouldn't expect to change too much. We do have a degree of support in place that we call on from time to time and on a systematic basis. From the Treasury perspective, we use an entity called Linked Group, and they will be feeding us live market information in relation to any money market fund. So if we've got we do have an investment in a money market fund at the moment. So again, being able to be advised that is a AAA rated fund is important to us. And then obviously from the accounting policy side, to the extent there are any areas that would require review, and one has been mentioned before in relation to intangible assets, is again we would call on EY for advice in that area if needed. So just going into the Treasury Management Strategy itself, and again I wanted to avoid going through and doing a page turn, but just to put it all into context for certainly, I think existing members who've been members of the committee for some time would fully understand this, but possibly the new members wouldn't, is that we are solely grant funded, and the critical point is that we don't have access to credit facilities. So we don't have the ability to go overdrawn in a bank account, and we are subject to, at one stage we had multi-year arrangements, but we're now into 1-year funding settlements, and therefore the critical consideration to us as an organisation is having enough funds to pay our way going forward. There's a hierarchy of consideration embedded within our strategy, which is around the key being creditworthiness. That's the main one, and these are ranked from top to bottom in terms of the hierarchy of consideration. So it's creditworthiness is first and foremost. Then it's about access to funds in terms of easy liquidity. And the third one is financial return, which is effectively yield. In terms of, and our key focus presently is around creditworthiness and accessibility. We do generally tend to use the Debt Management Organisation, which is a central government organisation that takes swept funds from entities and therefore reduces their overall interest charge on them as an organisation. So it kind of fits right in that if they were advancing to us in the first place, then if we did have any excess funds, we position it back with them. I think the main change between last year and this year is probably around interest rates and the environment that we face. I think again, I just thought it'd be useful just to tease this out. I mean, all this information is embedded within the strategy and can be accessed, but a year ago we were looking at rates over the forthcoming or the future 4-year period of between 0.7 and 1.3%. As we are today, it's looking at 0.1% all the way until 2024. So I think what that further highlights is that chasing yield is really not going to be any benefit to anybody, and re-emphasises the need to focus on creditworthiness and liquidity. In terms of the so before I go on to and then there's, we as a consequence of not being able to have a credit facility, we have a reserve strategy. So this is basically providing I suppose a buffer to manage our activities going forward. The reserve has been agreed historically at £2 million, or that's a cash reserve of £2 million, and that can and possibly will be subject to review if circumstances were to change with regard to, let's say, MPR. If that arrangement were to change, then possibly the reserve could be revisited. And the strategy is underpinned by having a reserve at the end of a period, a medium-term strategy. So it could be at the end of a 3 or 4 year window, and that obviously during that window, to the extent that the reserves are required, they will be released. And I hope I'm not going too far off on a limb by saying that, and I do say the word it's likely, subject to board's approval, I think it would be likely that we will be releasing part of our reserves brought forward to underpin the 21-22 budget. again linked into the financial constraints or the funding arrangements that Ian referred to before. Moving on to the accounting policies. So again, I'm an accountant by background, and these are critical because these effectively define the way that we conduct our business. They are driven by IFRS and CIFA code. That's International Financial Reporting Standards.
Well, just before we move on to accounting policies, can we just pick up any questions on the Treasury management? Anybody got any questions on the Treasury management? Just one thing from me, Paul. If I mean, obviously you've got that quite marked change really in interest rates, but I mean the Bank of England sometimes talk about negative interest rates. How would that impact on the Treasury strategy?
Well, I don't think it changes the strategy, Chair. But I think I mean to be quite frank, we actually have faced negative yield during the year. I mean, very modest. I mean, again, it's been minus 0.1%, but the principle of putting, £5 or £10 million of early grants, that's been awarded to us, and put it on deposit and effectively get less back. And it is 20 or 30 pounds that less that comes back, but they are real reductions. I think what's interesting is it's almost a trade-off between transaction costs and yield now. But so the longer we can, it is. So yes, we are faced with them. I think it's going to be interesting. I think certainly the longer-term projections don't, at this stage, don't steer towards a significant negative yield, but that could happen. I still think if it were to happen, I still think that we would probably adhere to the same strategy, which is around being risk-free and making sure we don't expose ourselves to any incremental risk in the pursuit of avoiding negative yield or chasing a marginal yield. I think we would still try and restrict our funds to one entity to be less than 5 million, and where possible position with DMO because it's the lowest risk.
Yeah, I think that's reassuring for the committee to hear. So I appreciate that, Paul. Thank you.
All right.
Okay, sorry to interrupt. Yeah, you were about to move on to accounting policies.
Yeah. Okay. So again, accounting policies are essentially the way that we conduct our business from a financial perspective and capture the information in our statutory accounts. The documents that are attached behind they contain both the policy and how it's been considered to be applied during the year in relation to that specific accounting policy. In terms of what members may have recalled from last year's accounts that were drafted, the accounting policies in themselves do form part of the accounts. They're one of the notes of the accounts, and again demonstrate exactly how we would account for the various transactions. I think the main technical area is one that Karen from Mazars mentioned before, which is around phase 3 assets, which is the bottom point there. The termination of the IST funding arrangement effectively earlier this year, means that there will be no further investment beyond the close up of the programme, and the close up will probably have a tail that goes into beyond March 21. But again, so the critical point is at what stage do we novate these assets to either to an LTA or back to the department, and that will determine what the accounting is. I think again, Karen mentioned that there was a technical matter around phase 3 last year, and I think what we would endeavour to do this year is to all agree in advance prior to the year end what the accounting is, so we don't end up with any form of discussion or debate post the year end effectively. So that's probably the main technical area that we're going to be talking about during the audit. Other than that, Chair, there's not a great deal to comment on really. I'm happy to take any questions from members.
Okay, any questions? All right, thanks, Paul. Yeah, very important part of the accounts, obviously, and it's important to have it on our agenda, in that obviously once a year we're recommending the account to the board, and it's important that we are aware of what the accounting policies are embedded and underpinning those accounts. So appreciate that summary through, and useful to the paper, which obviously is very comprehensive and very helpful too. So I appreciate the work that's gone into that. So thanks very much indeed, Paul. And unless there's any other questions on that, we'll move on. Thanks very much. Okay, let's go to item 10, the annual governance statement. Julie or Deborah, who have we got doing this one?
Chair, it's me, Deborah.
Hi, Deborah.
Yes. Morning. Thank you, Chair. Yes, at your last meeting, I advised the board, the committee, that we would be commencing the preparation of the annual governance statement for the year 2021. And this report sets out the basis on which we have carried out the review, looking at each of the principles of good governance in guidance issued by SITFA, and then comparing the activities of TFN during the current year against those principles. And you have as a background paper, or at Appendix 1, a first draft of the annual governance statement for the current year. And Chair, rather than go through it in detail, I'll probably go through it page by page and identify any pertinent points. So basically, the review looks at what we have done in relation to each of the principles. So the first one is behaving with integrity, demonstrating strong commitment to ethical values and respect for the rule of law. We have looked at how we have operated and updated the governance statement with actions that have taken place during the year. So I've included the review of the anti-fraud and corruption policy, which is again another item on the agenda this morning. I included the way we are embedding the updated whistleblowing policy through training by Protect, which is going to be rolled out during March. And also the way we are embedding diversity and inclusion across the organisation through a working group set up by the Employees Forum, so that actions and an action plan in relation to diversity and equalities can be drawn up during the year. And moving on to Principle B, ensuring openness and comprehensive stakeholder engagement. The main area of activity during this year has obviously been the move to virtual meetings. Transport for the North had the technology in place to be able to move to virtual meetings seamlessly. And we have continued to operate in an open and transparent fashion throughout the pandemic. We also managed to hold the Transport for the North conference, which was held virtually in December and was attended by nearly 600 delegates. So that was quite an achievement in the current circumstances. We've also started to facilitate virtual webinars branded as TFN Talks, and they've covered a strategic rail, the future of roads, northern growth, Northern Powerhouse Rail, Integrated and Smart Travel. And these are public forum where they're external panelists, and that they've been well received, I think. The next stage in the preparation of the decarbonisation strategy will be a full public consultation, which is currently being planned and will be rolled out in the spring, so that the strategy will be able to be adopted before the climate change conference in November. And then the final element in relation to transparency has been the production of the monthly operating report, which we've continued to develop and to deliver during 2021, which obviously provides members and the public with detailed information about performance of Transport for the North's major programmes.
Can I just interrupt there for a second and bring in Councillor Bruce? I think he just wants to make a point before we move away.
Well, mine was really going to be, if I may, Chair, just to follow up what Deborah said, and I thank her for her report, and I think it almost highlights, although it's not strictly for today, how important it is that we continue to have webinars and conferences to point out the huge advantages of the uniqueness of this organisation. And as the most distant member, I think the fact that from, I don't know, Silleth to Scunthorpe and Stockport to Scremiston, people in an entire region can work together regardless of persuasion is an example to all, and we have to keep publicising the advantage to ensure that those, and there may be those about who want to secure more control centrally within the country, that we get our message across, because I think we can do it far more effectively understanding the region than people who live a very long way away. But I'd thank Deborah for almost touching on that. It's important we never lose an opportunity to make that point, Chair. Thank you.
Thanks. Back to you, Deborah.
Thank you, Chair. Moving on to the next principle, defining outcomes in terms of sustainable economic, social and environmental benefits. Well, obviously, the whole rationale of TFN is the creation of sustainable economic growth. And that is the key driver behind the strategic transport plan and all the activities that TFN proposes. However, during the current year, the main focus has been the production of the decarbonisation strategy, and also the development of the TAME function in developing the analytical framework. And obviously that has been the subject of an internal audit report to demonstrate the way in which TFN uses evidence as the basis for its proposals. So moving on to the next principle, determining the interventions necessary to optimise the achievement of the intended outcomes. I think one of the key areas in which Transport for the North has done that during the pandemic has been the creation and maintaining of the North of England contingency group, which brought together all the main rail delivery partners to ensure that the rail services continued to meet the needs of those frontline workers who needed to travel during the pandemic. Obviously, we also completed work on the economic recovery plan and submitted our advice to government, which is now being considered by the DfT's acceleration unit. And there were further successes, including the further investment in the major roads network. So there are new programmes for schemes in Cheshire, Cumbria, York and North Yorkshire, and funding for development for new schemes in Lancashire, Stockport, Tees Valley and Liverpool. Moving on to the next principle, developing the organisation's capacity. The major development during 2021 has been the development of welfare for Transport for the North employees. There's been a very well developed programme of wellbeing sessions open to all employees, addressing mental health and physical health and well-being, and that has run throughout the year and been well received. And the final principle is managing risk and performance through robust internal control and strong public financial management. And the major development in relation to managing risk has been the procurement of a new risk management strategy system, software that will now be rolled out to assist the programme teams in their risk management. So the final final aspect of the annual governance statement is first to look at how we dealt with the challenges identified for 2019-2021. So we said we would review the Constitution in the light of any changes flowing from the Blake-Jones review. And as well, members will know that the Williams review has not actually been published. So at this point, a further review of the Constitution is being held in abeyance. The further adoption of the assurance framework is being held in abeyance again, pending the anticipated white paper on devolution. We've completed the rollout of monthly operating reports, and obviously we have managed to hold virtual meetings in response to the COVID-19 pandemic successfully. So the governance challenges that have been identified for 2021-22 are, first of all, the appointment of the new chief executive. Secondly, review of TFN boards and committees, in particular with reference to the General Purposes Committee. And this is a review that has been called for by members of the TFN board. And finally, a review of the scrutiny function. Now that we've been in operation for 3 years, it seems appropriate to look at the policy of scrutiny first and how well that's working. So Chair, that is the draft at this point, and clearly it will not be published until the end of May, and a final version will be circulated to all members prior to publication for further comments.
Oh, thank you for that. So really at this point in the proceedings, as a committee, are we approving then this as being a draft, but at the end of the day there's still time to make some changes before it's finally published?
Absolutely, Chair. The commitment to you last meeting was to bring a first draft before the committee. It's not the final version. Obviously, there are actions still ongoing. There's plenty of opportunity for members to make comment on what is there at the present time.
Okay, thank you very much indeed for that thorough run through the document. Very helpful, thank you. Just before we move on, any immediate questions from anybody? No, it seems a very comprehensive document, and appreciate the work that's gone into that, so thank you. Okay, do we now need to perhaps just move on to anti-fraud?
Yes, Chair, thank you. The reason this report has been before you this morning is that, as members will be aware, monitoring the anti-fraud strategy is one of the terms of reference of the Audit and Governance Committee, and therefore I thought it was appropriate to bring a report to you setting out all the measures that Transport for the North has in place, which together create the environment in which we address fraud and corruption. So the report briefly sets out all the different elements that are brought together to address fraud and corruption, these being the roles of the statutory officers, the financial regulations and policies, obviously Paul referred to the Treasury policy and also to the accounting policies. Then there are the financial controls inherent in the financial system, the contract procurement rules and the controls in the procurement system, our data security policy, the code of conduct for members and officers, the gifts and hospitality policy, the whistleblowing policy, and then the internal audit reviews, which obviously assess the securities that are involved, particularly in the financial controls. So I just thought it would be helpful to bring together all the different strands of those controls and would hope that the committee are assured that there are systems in place to support the anti-fraud and corruption policy. And if members have any questions, particularly on the financial aspects, they'll need to address those to Paul.
Okay. First of all, any questions then to anybody? No. In terms of the recommendation, I think, are you looking for this committee then to approve the systems in place and support the anti-fraud corruption policy? Are you looking for an approval there?
I think, Chair, we actually would ask you just to say, receive the report and acknowledge that you are satisfied that the systems are in place, to assure you.
Okay. All right. Thank you.
Happy to move that, Chairman.
Thank you very much. Anybody to second that? Kevin. Right. Excellent. Thank you very much indeed. Very helpful report. Very reassuring. And unless there's any further questions on that, we'll move on. Thank you. Right. Okay, that takes us to item 11, which is the corporate risk report. Have we got Hadi today?
No, Chair. Hadi's had to take a few days, so I'm presenting this report rather than Hadi.
Okay, thank you, Ian.
So I will. I won't try and share my screen. I think there's probably there's two items that we need to pick up. One is just the actual substance of the risk report itself, and then the second is the proposed new format that we've discussed previously. What I'll do is I'll take the substantive item first. There's probably a couple of things that it's worth saying before I just quickly run through table 1, which is the kind of key headline risks. I think the first is that members will have noticed the number of issues and high risk items or very high risk items that are on there. I think there are two things. I'll come on to them individually in a moment, but I think there are two things that are probably worth bearing in mind. One is that, as we've discussed previously, I think some of this just reflects the extent to which TFN is tasked with doing things for which it doesn't have a full ability to control the environment in which it's doing them. And I think that as we go through, that we'll see that is the case. I think that's just reflective of where we are at the moment, given the level of uncertainty that is it just in the system generally, as it were. I think the second thing I'd say is that all of these risks that have turned into issues, I think won't come as a surprise to anybody, certainly anybody who's seen the previous risk reports. And it's probably worth noting that all of these items which are flagged as issues have got separate reports attaching to them at the board meeting today. So these are things that are being addressed through TFN governance as we go. So I wouldn't want anybody to think that these issues were appearing on the risk register and not being addressed in any way. If I just run through the corporate themes, I think that the first item on page 319 is the COVID-19 pandemic. I think it's fair to say, and it's been discussed previously today, that we have learned to manage that. There are still risks associated with the levels of remote working, but I think it's fair to say that we along with lots of other organisations, including partner organisations represented on this call, have got to learn to work with COVID-19. So I wouldn't suggest that was a significant risk at the moment. Risk 2, which is TFN reputation and political engagement, probably overlaps with TFN operations, in that the thing that's creating the issue is the same, and it's the thing that Liam referred to earlier in terms of funding cuts, and those funding cuts are both to the core allocation that we get, but also to the IST programme. Both of those are addressed in reports to today's board, but those are issues that we are working through. Embedding the strategic transport plan across programmes, which is obviously a key part of actually delivering the work that TFN is tasked to do under its functions, is actually one of the few risks in this table that we have more or less total control over, and we are, as you'll see, in a position where we're showing that as a medium risk. That is not something that at the moment we see as being a significant issue, certainly in terms of the work that we're doing at the moment. Likewise, delivery of robust and compelling evidence to support investment programmes. Again, that is something that we are much more in control of. Again, there is an item included in today's funding and business planning paper to the board in relation to early approval of commitment to the investment pipeline benefits analysis programme, which plays into that risk. But that is again something that corporately we don't feel is a significant issue just at the moment. And likewise, transport decarbonisation and climate change emergencies. This is not to say that we think that the risk of climate change is low, more that TFN's risk of not doing what it is committed to do through its business planning and to its partners is relatively low. And again, that is largely because we control the moving parts there. Just before I move on to page 321, has anybody got any comments or questions up to that point? Okay, I'll continue. TFN operations I've already talked about. Compliance with TFN with relevant laws and regulations is again something that we have a large degree of control of, and the risk is relatively low. I think the next three are probably, along with the funding, are the most significant risks. The first is the revised framework delivery for Contactless. Obviously, the withdrawal of funding that I referred to when we were talking about when we were covering the monthly operating report item does essentially prevent TFM from continuing with that work. That work will stop. There is a wind down paper going to board this afternoon in relation to that. And whilst we will continue, as I mentioned in response to Kevin's question earlier, to try and maintain some capability and some capacity in relation to IST, we clearly won't be in a position to deliver against a set of programme objectives for which the funding ask was 33.4 million. So that is a reflection of the funding. The Northern Powerhouse rail risk. The issue is actually being triggered by the level of the BCRs currently and the costs associated with some of the infrastructure. Now, I am aware that there is information that was received very late on that's gone into one of the board papers in the main board, which shows those BCRs as being actually slightly better than they were showing when this report was prepared. That information was received very late on, but I think there are still significant risks associated with Northern Power Rail and the submission of the SOC, partly to do with the continuing kind of questions around the BCRs and the cost of the infrastructure that is coming back from Network Rail. There is also a point that we have been requested by the Secretary of State that we delay the submission of the SOC until after the publication of the IRP. That will obviously impact on our ability to hit the deadline that we've been targeting for the last probably 18 months, which would be the SOC being submitted in March. And then finally, the rail operations risk. I mean, this plays to an extent into the question that Alan raised right at the start in relation to services on the Calder Valley line. That is a small part of the risk that is set out here, and that is the kind of impact of the pandemic, both on the services that are delivered across the north and the delivery of services that have previously been agreed, but also in terms of what do the reduced passenger volumes into the future do for business cases for improvements both to infrastructure and to services. So there's a kind of two-pronged risk associated with that the team is managing, but obviously the risk is being driven by circumstance rather than by inaction on TfN's part. So that was a quick whiz through all the headline risks, Chair. I'm quite happy to go into a bit more detail. I'm sure people have had a chance to have a look in the report, but if anybody's got any questions, then I'm more than happy to take them.
Okay, any questions? I can't see any questions in. I think everybody's understanding the report fine. It doesn't make great reading in terms of the message. Say there's so much of this which is outside control of TfN, so it makes resolution very difficult. Okay. The report details the nature of the risks and the mitigations and the owners. So unless there's any questions, we would like to move on, if possible, to have a look at an alternative format, which I think Ian's going to just demonstrate to us.
I'm having a slight problem. James, would you be able to just stick it up on screen?
Can I just do a sec while I open the file up?
Just whilst James is doing that, this revised format is, I think, in response to comments that we've had. I think both from this committee, but from others as well. That the actual way we are setting these risks out could be made more helpful to the user. I think it's also fair to say that the formatting and the structure of the document as it is makes updating it and ensuring that it's consistent when you do update it is actually quite difficult. So it's not even something that is particularly helpful to the people preparing it. So it's not great for the user and it's not great for the preparer. So we wanted to try and move away and just come up with something that is a bit more user friendly. I think the example was included in the board papers, Chris, just whilst James is struggling with that.
That should be up on screen now.
So we genuinely, I'm not. You know, this is a proposal that we've come up with. If people have got additional things they'd want to see, or they think that we should be treating things in a different way, then I'm more than happy to take that away. We're not entirely wedded to this. We have looked at other people's risk registers in terms of coming up with this, and it's apparent that organisations do this in quite different ways. But if anybody does have any comment on this, we're very open to making changes.
Okay. Anybody got any issues with the new format? First of all,
just wondering what language that's in.
That is official Microsoft holding text. It's placeholder text that's put there for to allow formatting to take place to ensure that the tables remain the correct size. It's a derivation of Cicero, if you want to know exactly where it comes from.
I don't think it is.
My humblest apologies.
Okay. So really, the idea is just to make it, I guess, more user friendly and able to be absorbed more quickly. Is that the underlying?
Just to make it easy to use. So if anybody's got any comments to that effect, just let us know.
If that's the case, oh sorry, I've got Kevin just wants to come in there, I think.
Yeah, just a quick observation, really. I mean, I think the format looks really user friendly, Ian, and it's sort of at a glance, isn't it? So I think that works really well. I suppose wearing other hats, I'm used to organisations expressing their appetite and or their tolerance, but I guess that just wouldn't work really with Transport for the North. And I suppose it also links to another observation, which is, where we're sharing this risk unequally with central government. So I just wondered whether there's space for some where you could sort of mark that up. What is that sort of shared risk? Is it 80-20? Is it 50-50? Is it? Well, I mean, in reality, some of these, the risk might be sitting with Transport for the North, but all the decisions are sitting in Whitehall, which seems utterly unfair. But the fact that we've had this arbitrary cut just underpins that, doesn't it? So I don't know. I mean, it's a difficult one, but I just wonder whether there isn't a way of, disaggregating each risk and just sort of saying, well, we haven't actually got very much control here at all.
If you pan down, James, I don't know whether it's on this report or the other report, but there is a kind of qualitative assessment suggested to pick up your very point, Kevin, that some of the time, or quite a lot of the time, the risk is showing as high, and there's not a lot we can do about it. And actually, it's as much to do with what we are being tasked to do on behalf of members in the North, and the kind of governance framework, the national governance framework that we're operating within, which doesn't give any devolved bodies outside of the national governments that much ability to do certain things. I mean, particularly around funding, as you've mentioned. So I think there's a bit of it, which is you're right. We need to be. Some of this is about making clear to the user what we have the ability to actually do anything about, and what we don't have the ability to do anything about. And that's that. We can maybe just have a quick look at how we beef this up, or maybe bring it forward a little bit. I'll speak to Hattie about that when she's back.
Thanks, Ian.
Any other questions or observations? Can't see any. I think probably there needs to be some sort of timeline on this, I guess, because I would imagine the organisation wants to switch to this new reporting at some point. So if members have particular observations which they'd like to make later, is there a kind of end date for them to do that?
Yeah, there's I think the high level timeline would be to bring the revised version to this committee at the next meeting, and then if you are happy with that, we would then to the subsequent board meeting, which is probably the next time we would be reporting the risk register. We would take the revised version. So it's not. The timeline is not we need an answer in in the next day or anything. But I think probably if people, I mean, realistically, if anybody has any comments, probably within the next week would be helpful. And then we can just move on with it.
I can't figure out how to raise my hand electronically.
David, are you trying to come in there?
I'm David.
Sorry, I can't figure out how to raise my hand electronically. I don't even use Teams for this meeting. Yeah, Ian, I replied to Hedy after the last meeting. We had a consultation about the format, and we had a short discussion about whether underneath the themes, those sub-themes that the qualitative analysis is for should be grouped together so that we can see either what those risks are split out within the themes, whether there's a wide variety of risks and mitigations within each theme, or whether they're all fairly similar. And I was wondering what your thoughts on that were, incorporating it into the main table as sub-themes, so there'd be like 1A, 1B, 1C. Even if it was, yeah, so if so, there'd be a line for each of them underneath the main ones.
Well, in terms of the sub-risks within the league table that I've kind of just taken us through, or the mitigations that are sitting in the main report.
Well, in the main table, so you've got the themes, the major themes for the risks, and then in the qualitative, there's sort of sub-themes for each of those, for which there's an identified specific risk and mitigation. And I was just wondering whether in the main table those sub-themes could be put there, so we could see whether there's whether there's some heterogeneity or
yeah. So just bring forward slightly more detail, maybe. There are bullets in the main table, but make a more direct link between what is in the sub themes in the bulk of the document into the front of the document. Yeah.
So yeah, so in the green, yellow, red,
yeah,
black. So even if it was just at that level, so we could. Because I think, as we discussed in the last meeting, so some of the net risks that come out at a theme level are a result of a heterogeneous group of risks underneath that, and so for the committee to see that there's a wide range of risks and mitigations within each one.
So show the colour coding that's feeding into the overall overall colours. Yeah, because I'll take your point. Some of the issues are driven by a single black issue, but there are maybe the other subcategories are all yellow and green. So it's making it clear that it's some of them it's a one-off, others it's an accumulation of risks that are causing the overall colour. Yeah. Well,
I know it's a big ask from a formatting perspective. It's a lot of information, but
I'll have a look at how we. Credit where credit's due. I'll get James to have a look at how we might reflect that.
All right.
Okay.
Thanks for the comments, David. Very useful.
Okay. Any other questions on that? No. Okay. Well, as Ian's mentioned, if anybody can let him or others know of any extra changes which you may want to recommend. Please do so within the next week or so. That brings us to the end of the corporate risk register, unless Ian, there's anything else you want to say on it?
Nope.
In that case, from the action points, we still need to sort out the dates of the next meeting. Ideally, we want to try and put them before the board meetings, but the next meeting we would normally have will be in June. And the board meeting's on the 9th of June. Now, correct me if I'm wrong, Ian, but normally, is that the first look at the accounts for? this committee?
Yeah, I think that's. I think the first meeting is normally June. But yes, I think it is from memory.
Yeah, and we usually have a first look at the accounts, I think, at that meeting. Does that need necessarily to be before the board, which happens to be on the 9th that week, or?
I don't think it does. I don't think there's anything from the meeting, the Audit and Governance Committee meeting, that would drive anything being presented to the board on that particular meeting. Okay.
In that case, I suggest that we take the following dates for the next 3 committee meetings. That'll be the 10th of June, the 15th of July, and the 16th of September. So just repeat: 10th of June, 15th of July, and 16th of September. Hopefully everybody can make those, but at least they're in the diary now.
Just one question, I guess, going back to what was the point that was raised about the annual governance statement. I know the annual governance statement will be required to, I think, to be included in the unaudited draft accounts that we need to publish, I think, 10th of May. Debbie, are you? Yeah. That's not a problem, is it?
The annual governance statement has to be published along with the accounts by the end of May.
Yeah.
So that it's.
Well, it's got my date. Yeah, I've got my dates wrong.
Yeah. I mean, in previous years, we've circulated the final version of the annual governance statement to members for comment individually, and then taken those comments on board.
Ian, can I just interrupt there? It's Karen from Mazars, because the consultation from MHCLG is that your accounts and therefore the annual governance statement don't need to be ready until the end of July now. So assuming that is where we end up when the consultation process is finished, you are perfectly able to not publish them or put them through members before then.
Okay.
Okay, so does that means our 10th of June date's still okay then?
So yeah, that sounds like that's a plan.
Yeah. Okay, good. Well, let's go with those 3 dates, and if members wouldn't mind putting them in the diaries, that'd be great.
I'll send a placeholder invitation out, and we can finalise exact timings. And obviously, there's still a little bit, certainly towards the end of the year, possibly return to face-to-face meetings or hybrid meetings. So I'll put placeholders in people's diaries and update nearer the time.
Much appreciated. Thanks very much. Okay, unless there's anything anybody wants to raise at this point, I think we can draw the meeting to a close.